Anybody to do anything nowadays. And when everybody's backed up, don't nobody want to come. Part of life being an entrepreneur, my friend.
Yes, sir.
But you are extremely resourceful. You get it done.
I try my best.
Is that how it is for you when you say you got a problem? People are like, yeah, Clarence, he'll figure it out.
Um, I mean, I think so, which I don't think that that's wrong for them to think that. I believe that. So,
You're like, man, I really need some help, y'all. I need to throw me a line. Throw me a line.
no,
Shut
I
up,
know how to
Clarence.
ask for help. So,
Okay. It's good to see you, my friend.
it's good to see you, sir.
Thanks for working with me on this. I know I've been trying to get you to come on here and just talk and share all that wealth of wisdom that you have round up as you come on in. It's an honor to hang out with y'all as we wrap up January. We are wrapping up January. It's gone already, Clarence.
It is. It's last year went pretty fast, and it seems like this year is trending on the same path.
Ain't slowing down, is it?
No, sir. No, sir.
How's 2022 been for you so far the first 30 days?
First 30 days have been pretty good. So, tackling the business goals that we got. So, it's been good and more to come.
I'm glad. Round up, come on in. Greetings, class. It is an honor. I cannot tell you how much of an honor it is that you allow me, us, to come to you, home, on a phone, wherever you are. You, I consider to be a special person because you're not Netflixing it up. You're not binge watching TV and just wasting time. You are investing your time. You can either do one or the other, waste it or invest it. So you are taking the time to actually invest yourself, invest in your future tonight as we talk to a CPA. We all have our uncle that we have to take care of each and every year. Our uncle. I say that because that's how it was told to me. I've been audited twice, and I do not want to have another audit. So, and I don't want you to have to go through the mental anguish of being audited. It is not fun. You ever been through an audit, Clarence?
I myself have not been through an audit, but I have helped and represented other clients when they've been through an IRS audit.
That's weird. I get to talk to you about that because you don't have the stress because it really ain't, you ain't on the line. You just like an advocate for the person on the line. How does that mentally for you?
Well, in the event that I was ever audited, believe it or not, I actually wouldn't represent myself. I would hire one of my other CPA friends. Usually, Janice is going to be my first go to. Hey, Janice, I got an audit. Go ahead and represent me because I don't want to represent myself. And it's not that I don't know how to do it. Of course, I know how to do it, but I still want a buffer. You want that buffer, someone to advocate for you, because sometimes an auditor actually they may ask you a question and they want, and if you're representing yourself, then you may have the pressure to feel like, hey, I got to give you this answer right now, and that might not be the best for your situation. So get an advocate, and I'm a professional, and I will even get my own advocate. So,
Wow.
so if you're ever in, and we're kind of just jumping in right now, but if you're ever in an IRS audit, there's three practitioners that can actually represent you before the IRS who have what they call unlimited representation rights. Those are CPAs, attorneys, and enrolled agents. So if you ever face an audit, you want to get one of those three practitioners that have the experience in dealing with the IRS and IRS related matters. So, attorneys, CPAs, and enrolled agents. Those are practitioners who have what we call unlimited rights to represent taxpayers before the IRS. And you can do that by filing a power of attorney form 2848.
Good Lord. That's your CP. That's your public service announcement for today.
Yes, sir. Yes,
Don't represent your damn self. If you going to mess with that,
sir.
got a CPA telling you he wouldn't even. That's like an attorney going to court. They don't even represent themselves.
Yes, sir.
Roundup greetings. I'm Chris Haskins. I'm going to be your co-pilot tonight as I hang out with Clarence Harris. My mission and ministry is to raise your financial literacy through real estate investing and entrepreneurship. In doing that, I just want to make sure you know what's going on from A to Z, whether you're in real estate, business, entrepreneur, thinking about starting your business, been in business for a while. Tonight's guest, Clarence, he's a CPA, been doing this for years, representing clients. He's also a real estate investor, proud business partner of mine, running mates. It's an honor to be able to work with him as well as share him with you tonight, talking about getting our books in order, doing some bookkeeping, and getting prepared for our uncle for April 15th. Clarence Harris, greetings, my brother.
Greetings, Chris. It's an honor to be here. Thank you for having me on the platform. Roundup family, thank you for allowing me to share some information. I love doing this. So, hey, let's jump in.
That's right. You're a teacher too. What do you teach, by the way, at Norfolk State? Don't you do something there?
I do. So I teach part-time at Norfolk State University in the great city of Norfolk, Virginia. Behold the green and gold. So I'm in the School of Business adjunct faculty, and I teach accounting. And sometimes they will actually have me teach intro to entrepreneurship courses as well.
Sweet. That's nice, man. You're definitely the man to do that, Clarence.
Yes, sir.
So if you guys have been following my content, I'm working with Clarence on building some short-term rentals together, and we're going to be we're actually working on putting together the Travel Nurse Airbnb short-term rental workshop for you. So if you haven't signed up to be on our email list so you don't miss that, that link is in the video description. We would love to have your email address. I don't want you to miss it. So far, we have a tentative date of March 5th to bring that to you, but we will open it up for early bird registration over the next few weeks. You don't want to miss the early bird and have to pay more than you have to. So if you want to join our email list, that link is in the video description below. Clarence, where are we starting at tonight, my friend? When we're talking about bookkeeping, let's go over all this. I'm just gonna let you go 40,000-foot view because I'm not an expert on this.
Okay. All right. Well, let's go ahead and dig in. So the first thing is, hey, it's tax season. Tax season is now. So for all the taxpayers, the business owners, you have to get your tax returns in. So for our business returns, we have the March 15th deadline. And then for our individuals, we have the April 15th deadline. Now, I get a lot of calls from individuals, and hey, I just started up my business, or I've had my business for quite some time. I don't really have my books in order. How do I do this? Clarence, how do I get my books in order? And so, in my opinion, there's some foundational things that I think everyone, and so this could be for the real estate investors or folks who have their business that's not necessarily involved in real estate, but there's just going to be some foundational things that I think you need to have in place. So when it becomes tax time, and whatever CPA accountant that you're partnering with, you'll be able to do a few things. One, you're going to know exactly where you are in your business from a financial standpoint, and that helps you to make better decision making. Two, I know some folks may prefer, or maybe not that they prefer it, but I know some folks probably own the shoebox receipt.
That's how I was going. That was me. I was a shoebox boy. My account used to say, "You're a shoebox boy."
Listen, you can't stay on the shoebox method for so long. And here's the reason why. Actually, when you take it to your accountant, so you actually give me your shoebox, am I able to help you? Yes. But because you gave me a shoebox full of receipts, guess what? I'm going to charge you a whole lot of money. Because really, I don't even want to go through all those receipts like that. So one, I'm going to charge you a whole lot of money. And I like to use this analogy, and I've told it to some of my clients who have been in the healthcare profession. So if you got a doctor, or whether it's a doctor or a dentist, let's say you don't go to your doctor and you, over periods of time, you never go to your doctor. So you don't go to the preventive checkups. And then all of a sudden, you have a major issue which requires some sort of major surgery. Yes, the doctor can help you out. Is it going to be as effective? Is it going to be as effective to do the major surgery compared to if you would have been doing the preventive maintenance, going to the preventative checkups?
Mm-hmm.
It's not. And it's going to cost a lot more. The same thing applies to your accounting. You can wait years and years and years and not, do your tax returns, not have your books in order, and then there may be a trigger. Maybe is that happy letter from the Uncle Iris or Aunt Iris, whatever you want to call it. The IRS says, hey, you have not given us any tax returns. Or, you know what, we want to look into your books a little bit further. We think you owe us some money. Now you're going to be forced to become compliant. And then when you start pulling everything after the fact, years after the fact, shoebox receipts and just records from all over the place and no order, is kind of chaotic. So yes, you can give it to a CPA like myself or an accountant like myself. We can help you get it in order. It's not going to be as efficient, and we're going to charge you a whole lot more money. So how do we avoid this? I'm glad that everyone asked. So let's talk about some good foundational things. And this is going to be, quite frankly, it is very simple. So the first thing, when you set up your business, you want to separate your business from yourself, the individual.
Business personal. Before we get to what you should do around, let me reintroduce you, Clarence. Roundup. I'm hanging out with my boy, friend, running mate Clarence Harris. Is a CPA in Norfolk, Virginia. Clarence, Roundup, get your questions in the box. And don't forget, if you haven't already signed up, chrispropertydata.com, get your PropStream free trial. I think it's 14 days. If you need to learn how to pull, list, skip, trace, find mortgage data, all that stuff, go to that link right there, chrispropertydata.com. Clarence, tell me what you have seen in the past. Give us a picture of the bad stuff or what you see that's going to cost. Paint what not to do first before we get into what to do, so people can kind of relate if that's them, because I know it was me.
I would say what not to do is not to have, if you are a business owner, not to have basic bookkeeping for your business and record keeping. That's what not to do. So if you are an individual, and don't be ashamed if you are, that's why we're on this call and we're going to correct these behaviors. But if you're going 1 year, 2 years, 3 years, you haven't really kept track of your income, your expenses.
Oh my Lord. People do that?
Absolutely.
Holy cow.
And this isn't like it only happens a little bit. A lot of folks. Because
people go years without.
Everybody is busy doing what they are doing. The wholesalers are busy finding deals.
Uh-huh.
If you're a truck driver, you are busy driving your truck.
I didn't know that. I didn't even know you could do that.
Yeah.
I would be too scared to do that. I'm like,
see, what happens is, here's an example of what can happen. You hear about the IRS and you don't file your return for 1 year. And you're like, oh man, I didn't file my return. Then another year goes by and you didn't file your return. You have some anxiety. You're like, man, 2 years, I haven't even filed this.
2 years.
Then a third year comes, you haven't put any records together, but you're like, wait a minute. It's been 3 years and they haven't even said anything to me. Now you start to get a little bit comfortable. Fourth year, you're like, oh shoot, man, I'm making money. IRS isn't bothering me.
I'm good.
Getting more comfortable. But hey, it could be year 5, year 6. IRS letter. We want to look at your records. Now what? Now you may have a letter says we want to lien your bank account. We intend to levy your bank account, or we're going to do an examination. Now you got to start getting everything in order. And if you're 3, 4, 5 years behind, to really get that up, I mean, you shoot, just in an accounting fee, you might be looking at anywhere from $5,000 to $10,000, maybe more, depending on the size of your business, amount of transactions that you have. So
Wow.
instead of waiting to the end, let's take care of that on the front end. And there's some other reasons why we want to have the good record keeping. So for all the different real estate professionals, we know that real estate can be what we call the OPM business. You can acquire real estate with OPM, other people's money, specifically folks like the bank. So if you want to go to the bank and get a loan, guess what they're going to ask you for? They're going to ask you for your financials. Most institutions are going to ask you for 3 years of financials, which is going to include your profit and your profit and loss, and your balance sheet. They're probably going to ask you for 3 years of tax returns. In addition to that, they're also going to ask you for what they call a year-to-date profit and loss. So if it's June, they want at least what has happened from January of the current year through the end of May of the current year. And so the best way to be able to provide these things in a timely manner is to have a good record keeping system.
Mm-hmm.
And it's once you set it up, it's not that hard to maintain it.
Hmm. I think the key, what you're telling, I cannot imagine being behind 2-3 years. I mean, good God. I mean, I'm looking at the checks we're writing, I literally just paid the IRS like $30,000 like 2 weeks ago. I'm just like, I just could not imagine not being on top of that. I mean, you could owe, we're talking six figures. Some people could owe if they haven't filed in a couple of years, Clarence. That could be devastating for somebody's business.
It could, and it has been. So it happens.
Hmm. Roundup, you're getting it from the horse's mouth. The man is a CPA. He represents people. He does people's taxes, bookkeeping, all that stuff. So please, Clarence and I just discussed this yesterday. I'm like, Clarence, I want to bring you on the channel. What do you think we need to talk about? So he is in the trenches seeing this happening to people. Clarence, thank you for sharing this stuff for my homies.
Yeah, of course.
So staying on top of it seems to me the number one issue that you see that people kind of fall into.
Yep.
Gotcha. All right. So let's get to the good. You already painted the picture of the bad. So how can we get away from that stuff?
How can we get away from that stuff? So let's start. You have your business. Your business and you as an individual need to be separated. Okay?
Mm-hmm.
They need to be separated. And the first thing that we can do to help with that separation is if you don't already have a separate business bank account, that's going to be one of the first primary foundational things that we do is to acquire a separate business bank account.
Lost you, Clarence. 1 second. Let me send you the link so you can get to the phone just in case.
Okay.
I'm going to email it to you. I'm going to send it to your cell phone. Sorry about that, y'all. A little technical difficulties on the side. So separate, I remember I did not, when I got my first audit, I did not have business and personal. I had it all mixed together. And the IRS taught me you better have separate.
Yeah, because you don't want to commingle, and then it causes it can cause a lot of trouble. One thing that the IRS can do, if you're commingling and it doesn't appear to be any separation between your business and personal, they may disallow certain deductions that you're actually putting on your tax return. So if they disallow certain deductions, then that means you actually owe them more money. And because you owe them more money, then they can also assess more interest and penalties, and you're just digging yourself a hole that you don't want to do.
I sent it to your phone, Clarence, if you want to go to your phone now.
Yeah, I'm logging on.
All right, cool. Let me mute you this. Roundup, if you're just joining us, we got some technical difficulties on Clarence's side. I'm hanging out with Clarence, CPA, helping us get ready for tax time. One of my not favorite parts of the year, but I got to pay taxes every 2 weeks. I got a letter the other day that says, Chris, we want you to pay every 2 weeks. So So welcome to whatever that is. What am I doing? Oh, get that out. All right, add the stream. Clarence,
All right.
you look better there, cleaner too.
Oh man, go ahead.
I mean, it looks clean. The camera
Visual.
picture looks, yeah, it looks a lot cleaner.
Um,
You on the iPhone?
yes, sir.
Yeah, that thing is. Yeah, I heard they're optimized for social media. Okay, we said separate business and personal. Don't mix them all together. The IRS might not even allow. They could disallow some of the deductions that you put in.
Right, right. And so the first,
Gotcha.
so I would recommend getting a separate business bank account. That's one of the primary foundational things that you need to do. Get a separate business bank account. And we haven't even, I think it's beyond the scope of what we want to talk about today, but even with that, you should have a separate business entity for your business. So talk to your specific advisor on your specific situation, but you're looking at things, whether it's LLC, C Corp, S Corp, but talk to your specific CPA and get some guidance related to your situation, which one of those separate entities. But once you form a business entity, at that point, you can take those documents, your certificate of organization, get your IRS EIN number, that's your employer identification number, go to your banker. And you should have a good banker on your team of advisors. I say get your client team, your CPA, your lawyer, insurance professional, your marketing professional, and your banker. These are your key advisors that you want to have on your team. So go to your banker with your certificate of organization, your IRS EIN, set up your business bank account. That's pretty simple thus far. All right. Now, the next thing that I would recommend is you need to get some sort of accounting system. A lot of folks will use a system like a QuickBooks. In QuickBooks, you can have a QuickBooks Online or the QuickBooks desktop version. I think online is pretty simple. Kind of the difference between them, when you have online, you can access it from any internet browser. Excuse me. And it's a subscription-based model. So you're paying a small fee every month. If you buy the desktop version, you download it onto one computer, you pay a one-time fee, and you have it right there. So get QuickBooks or some other accounting platform. QuickBooks, Intuit, send me a royalty for saying this, but get your QuickBooks. You can sync it up to your business bank account. So what happens is all the transactional data that comes from your bank account, the transactions that comes from your bank account, they will sync into QuickBooks and they'll be housed in, let's call it a holding tank, right? So now all you have to go do at this point is go in QuickBooks if you're going to do it, or otherwise hire a bookkeeper. Go into QuickBooks. I recommend if you're business startup, you can spend 5 to 10 minutes a day, just depending on the transaction volume that you have. But spend 5 to 10 minutes a day. Go through your transactions. I went to Home Depot. Okay, we're gonna call that supplies expense. I went to Office Max. All right, that's going to be office supply. Yeah.
So you can just put that on you can just log in. You and your tax professional can both have access to it. You can just add it in. They can see it.
Absolutely. Yeah. So when you get QuickBooks Online, you can actually add additional users, and it also allows you to add account entity. So Chris, if you were working with me and you wanted me to have access to your QuickBooks, all you have to do is go to the manage users section and send me an accountant invite. I accept it. Now I can see your record. So maybe you get to the point in your business where you don't have time to do the day-to-day bookkeeping, and you may say, hey, Clarence, can you refer me to another bookkeeper who can manage the function for me?
Sweet. Okay. Yep. Yeah. We don't do any of that stuff. I just let the CPA do it. It can really be time consuming if you got a lot of transactions in and out.
Yes, sir.
All right. So some type of software dedicated to seeing ins and outs,
Yes.
expenses and income. So for real estate guys, we might have a big check coming in for a flip. I know for me, it might be a 20, 30, and you got to remember that stuff. A year goes by, you're like, damn, what was that 20? I don't even remember what that 20 was for.
Yeah, and for the real estate investors, whether you have different rental properties in your portfolio or you're doing different flips, and I've done both. So what I do when my QuickBooks has a function, it's called class tracking. So it's sort of like creating a separate department unit. So I could say, hey, 123 Street is one class,
Mhm.
ABC Street is another class. And so what happens is when the transactions come in, you can identify them by coding them to this class. So now you get to see what property one is performing from a profit and loss standpoint, what property
Mm,
two is performing from a profit and loss standpoint.
sweet. Sweet. So, Clarence, I want to ask you just a personal question. I was always told to have one entity for long-term holds and one entity for short-term holds. Just give me your view and perspective on that since you are the CPA. Or
The
at least, let's say at least one.
right. The answer is always going to be it depends.
Hmm.
So I can tell you some of what I do.
Yep.
That is going to fit everybody's situation, and I can even share what my clients have done. For example, I have one client. She has maybe about 10 rental properties. What she does is she has an LLC, and she'll put about 4 properties in one LLC. And then once the 5th one hits, she creates another LLC and then puts 4 properties under them. And then
Gotcha.
when she gets another one, she'll just continue to do that. And part of
Hmm.
that she's doing that is she's trying to minimize the liability that may happen if a lawsuitable event happens. So if a lawsuitable event happens in property one, which is part of LLC number one, it's not going to affect the other LLCs.
Gotcha. Gotcha.
I know some folks would just put a separate LLC for each house. So part of that really just has to do with your own risk tolerance.
Hmm.
And so I would actually consult with your insurance advisor as well related to that. So you're having a conversation with your insurance advisor, your CPA, and your attorney to kind of help you map out what those strategies are going to be.
Gotcha.
My
Gotcha.
I manage various properties and I have different entities for all the properties. Now, here's the thing that I do that helps my bookkeeping make sense better for me is every property I have, I set a separate bank account for every property. And
So you know that.
utilize QuickBooks. And so when I have my class tracking in QuickBooks, this bank account is tied to this property number one. Bank account 2 is tied to property number 2. Bank account 3 is tied to property number 3.
Hmm.
And if you're setting up this foundation, even if you're not even updating your QuickBooks, to the extent that at least you are having all your transactions hit your business bank account and nothing else, you're not commingling, at least that's going to make it easier for the accountant that you could at least bring your bank statements to an accountant and it will be easier for them to work.
Gotcha. That's sharp right there. Every property has their own. By default, that's almost like bookkeeping in and of itself, because if bank account A is going to 123 Main Street,
Right.
Gotcha. All right, y'all got that. That's a good tip to have.
Yeah, so set up separate business bank accounts. If you're like me and you have various rental properties that you manage or you're doing certain flips, do a bank account for each property.
Gotcha.
You don't have to, but I like that. And I think it's an easy way to just identify all the transactions for this property. We know it's this property because it's in this bank account, and I only use this bank account for this particular property.
Mm-hmm. And round up, and I know this stuff can get tedious and boring and it's not sexy, but from my perspective, the IRS is like one of my largest bills throughout the year. Clarence, I want you to just kind of stay there regarding how much you have seen with your clients, their tax liability. Are you seeing with larger clients, is the tax liability pretty big, or are you or are bigger clients writing off the majority of stuff? What are you seeing?
All of the above.
Yeah.
All of the but the one thing that I can say is the folks that get to take better advantage of the various deductions are those folks who, one, they have great record keeping. Two, they are in constant communication with their CPA or their accountant advisor.
Mm-hmm.
That's the other. I didn't get a touch on that. That's the other foundational principle is you got to have meetings. You got to talk with your accountant. So, whether you're talking to them, I tell my clients, hey, we can talk once a month, go over the books. We can talk every other month or at least once a quarter.
Mm-hmm.
That's part of that preventative maintenance.
Gotcha.
We're going over the results of your business. If you are thinking about any other financial transactions of significance that you want to take on, we can talk about that. We can talk about your business goals. And the more that your accountant knows, the more that they can help you in trying to reduce your tax liability while you still achieve your income and business goals.
Gotcha.
There's only but so many things that an accountant can do after the fact to help you with tax mitigation strategies.
Oh boy. We all got to pay. Round Clarence, I got a question here. Maybe you want to take a question real quick?
Yeah, absolutely.
D. Livingston, thank you for hanging out with us. What's more important, the CPA or the real estate attorney? Clarence?
I think they're both important.
Yeah, you gotta have both of them, man.
Yeah, I think you got to have both of them. And I guess it depends on what type. One is going to depend on the transaction that you're doing at what's happening at the current moment. So, but they're both key.
You gotta have them, yeah. D. Livingston, Clarence ain't gonna be closing no subject to, and then the attorney is not gonna be helping you do your tax strategies and dealing with your write-offs. I mean, they're both bishops on the chess board. Clarence, would you say?
Yeah, absolutely.
You can't get away with that. Let me ask you, Clarence, are you going to close a subject too? You're not closing none of that stuff.
No, I talk with the attorney.
Yeah.
Listen, I talk to my attorney very often. I talk to my banker very often. My insurance advisors, I talk to them very often. I even talk to my other CPA friends very often. So,
Trevor, one of our channel members, thank you for supporting us, Trevor. Clarence, is setting up an LLC as a holding company advisable? I'm presuming he's talking about the whole real estate.
well, disclaimer, I don't know your specific situation, but I would advise that you talk to your CPA or attorney. In some situations, it could be, but that is a conversation that you would need to have with your CPA and attorney. Just because I don't know the specifics of what you have.
You guys are good questions. Tax Keeper is a great app. Terrell, I don't know what that does. Do you know what that does, Clarence?
I haven't heard of it, but I'm assuring there's some sort of app that helps you with uh, record keeping. So
Okay, but yeah. Yeah. A Sago, Rodriguez says, this is the last year I filed my own taxes again. What? I don't even know how you would even, I can't even stand turning in paperwork, man. I'm like, God, drives me up the wall.
so some folks will ask me, "Hey, how do I know that I need a CPA to help me with my taxes?" And
That's a
here's
good question.
here's my general answer. The more that your tax situation complicates, that will be the indicator that you need to probably hire a professional. So if you have a very simplistic tax return, and here's what an example of a simplistic tax return. Maybe you have a job, you don't own a house, you don't have any kids, you just have a job. You get one W-2. I think you would probably be okay to file your own tax return. I don't think you necessarily need a CPA if that's all your situation is going to be. But now, when you start complicating your tax situation, and what are examples of complicating your tax situation? That's going to be when you start to add a business, when you start to get rental property, when you start to do flipping, when you start to become a short term rental operator, when you start up your trucking company, when you start investing and flipping stocks, when you start doing a lot of other things, that's when you should say, "Hey, I need to go get a CPA."
Yeah, I tried to do all that without one. It didn't work out good well for me. Didn't work out well. All right, Clarence. So we got separate bank accounts, different LLC. Make sure you get good records. Anything else you want to leave for them? Now, what's the
And
next step to make sure our books are ready to go?
periodic meetings with
Periodic meetings.
periodic meetings with your CPA.
Should we be asking our CPA what questions should we ask? If we say we're full time entrepreneurs, selfishly I get to ask. No doubt our account should be staying on top of whatever rules are coming out. And I got to be honest with you, the Trump tax stuff was just extremely beneficial for us. I'm not saying I'm a Trump supporter. I'm not, support either one of them. It's crazy. I mean, it's unbelievable the stuff that changed. Is that going to be changing, Clarence?
Yeah, I forgot the specific years that it runs out. It might be 2024, 2025. I forgot the year, but yeah, they do expire.
Gotcha.
But I mean, tax code is always evolving and changing, anyways. So here's what I would say: when you're meeting with your advisor, one of the things that I believe, or I'll say what I do, I want to know. I got to get a good handle of what is your business, what are you trying to do, what are your goals, what are you trying to do. From there, just based on my experience, then I can start asking you questions that you might not even think of. And then we can start dialoguing and putting together a plan.
Gotcha.
For example, here's a common one that I come across a lot. Typically, as a business owner or any individual, we want to pay less to the IRS, meaning we want to take advantage of all the deductions that we are entitled to take advantage of. Here's where it might not be so advantageous to you. If you're a self-employed individual and you're taking advantage of all these, but you're like, you know what? I want to go get me a brand new primary home and get me a mortgage. And you go to your mortgage professional and you give them your tax returns and you got all these business losses and like you're not financeable. Well, I got the money. Well, your tax return says that you don't. So we probably shouldn't have taken all of those deductions that we otherwise was entitled to because we need to position ourselves so we can get that loan that we're looking for.
Good point. Good point.
So that's just one simple example. So you got to have these conversations. Hey, I'm looking to make this major acquisition. You know what? I was thinking about, man, I got to buy a property and I need a down payment. I want to pull out 25,000 from my retirement account. Whoa. You know the implications of when you pull it out your retirement account? You know that you're going to get hit. If it's a premature distribution, you're going to get hit with a 10% penalty and it's going to count as additional income, which can probably raise your tax rate. So you could probably be paying 40%
Wow.
pull out.
You got to consider all that. You got to consider that. I took an early distribution under the CARES Act, Clarence. I want to be transparent with my rounduppers.
Mm-hmm.
Penalty free, tax free, all that stuff. And just paid it back. They had to pay it back in 3 years, man. That was pretty cool. Are they still allowing that, Clarence, or was that the one thing under the CARES Act?
What was that?
Is that still around, or the CARES Act one time early distribution thing?
I don't know. I would have to go look that up. I don't know
Okay.
that top of my head if it's been extended or anything like that.
All right. The roundup, get your questions in the chat for your accountant. Clarence is not giving you any professional tax or legal advice, but he can at least give you his opinion on just general things. Clarence, if anybody, are you taking on new? I know you how you feel, but are you taking on new clients right now, or what if somebody wants to ask you some questions? How do they get in touch with you, brother?
Oh, well, if you're on social media, you can direct message me at Norfolk CPA. My email address is Harris, so CHARRIS at acgfinancialgroup.com. And so there are some clients that I can take on, but just from a capacity standpoint, I'm not able to take on everybody. However, I do have partnerships with other great CPAs. So whether it's me or one of the other fabulous CPAs that I know, I'll make that introduction for everybody, especially the round.
Thanks, Clarence. Pink Dreamer 04 wants to know, do you set up an entity and bank account for each property? Richmond, Virginia, what's up?
Hey, what's going on, Richmond, Virginia? Myself, I don't necessarily set up an entity for each property, but I will set up a bank account for each property.
Gotcha. That's almost by default because you could just turn in all of that on bank statements. It's right there. 123 Easy Street is on this bank.
Yeah, and in my situation, for example, I have various entities, but some entities I partner with other owners. So we may have one entity that has 3 properties, but I will have a separate bank account for each one of those properties.
Gotcha. Jose Hard, what's up, buddy? Do you file your business and personal taxes separately or together in Williamsburg? Good question, brother.
What's going on, sir? That really depends on what entity structure that you have. If you're a sole proprietor or,
S corp.
Yeah, if you're a sole proprietor, you're going to file a Schedule C, which is going to be a part of your individual tax return. But if you have a S corp or a partnership or a C corporation, those all require separate tax files. So you'll have, partnership, you're getting a 1065, S corps 1120S, C corps 1120. So it really depends on what the entity structure is that you have. If you got rental property and you own it by yourself, you're filing a Schedule E that is a part of your individual tax return.
Can we stay? I know we've got the 45 minutes, but I have to at least touch on 1099s because they're due in a few days.
Yes.
Give me your perspective on how you deal with doing 1099s. That saved my butt in my last audit because it's all right there. But I know I didn't know what a 1099 was or a W-9. Give us a very quick 40,000 foot view of that for somebody that's new and needs to kind of understand how to track all that, Clarence.
Right. So when you have independent contractors that you are paying, once you hit a certain dollar threshold that you pay them, I believe it's $600, you need to send them a form 1099 that basically says, hey, I paid you $10,000 during this year. I paid you $20,000 during this year. And part of how you set that 1099 up is you do have to give them a form, IRS form W-9, that basically says, hey, what's your name, address, social security number? And the IRS does this so they can track where money is going to. And that's how they can audit you, say you're not reporting all your.
Hmm. Get those 1099s, please, y'all. If you don't do anything, get those W-9s signed. I don't know, some of the homies don't want to sign them. I just show up with the check right there on the edge of the clipboard. I have the check hanging right here, y'all. I got the W-9 right here. So they'll see the check. And I'll just ask them their name, mailing address, social. Let's say sign here. So there's a strategy and a technique that you can do to get those 1099 signed. Because you do not. Well, let me ask you, Clarence. If you don't get them signed, I mean, it's just basically your record keeping, right?
Yeah, well, the W-9, the real reason behind the W-9 is it gives you the information so you can actually complete the 1099, and that's what the IRS wants. The IRS isn't going to collect the actual W-9. They're just going to get the 1099, but you use the W-9 to get that information. So if you can get the information without getting the W-9, hey, they give you their name, address, social, boom, then you can go file your 1099.
But those conversations can be funny and funky after the fact, can't they?
They can be funky after the fact. So before you pay them, say, hey, look, we are a legitimate business as a part of being a business. We need to get your information because we have to report this to the IRS. The great thing for you is because now that I'm giving you a 1099, guess what? That puts you in the position that you are now, in fact, your own business owner. And, and I'm assuming they were probably maybe an employee before. Most folks have started out as an employee. But when you become an independent contractor, you, in fact, get to do a profit and loss from your business. And so now that opens you up to the world of more business deductions that you otherwise don't get to write off as an employee. So it's actually a great thing that we're setting this thing up for you. So if you would go ahead and sign here, sir. Thanks.
I like that. I like that little spiel you give them there. Get them joints signed, y'all. I'm going to leave it alone. If y'all don't take anything away from this tonight, get those W-9s and get them 1099s out. Because last thing you need, I promise you, IRS looking at you, you got 50,000 that you paid out. And they're like, nah, I don't know if we're going to allow all that because you didn't get the. Let me ask you, Clarence, do you know if they're going to allow it or not? I mean, you could have wrote a check to your boy. He could have cashed in and give you the money back.
Well, I'm just going to say the best thing is to get them filed.
Get them joints done, man.
Yeah, just get them done. I saw Will I Am has a question. Are tax penalties paid in 2020 deductible in 2021? You can't write off a federal tax penalty. Not deductible.
Yeah, good to know that. James Mitchell, thanks for that great information. What should you do if you are missing a few purchase receipts? Must have paid cash.
Yeah. So receipts are always going to be the best evidence in the event that you are ever audited. However, what I like to tell my clients is to the extent that you don't have to use cash, don't use cash. So use your debit card, your credit card, because that actually leaves evidence that a transaction has happened. And so to the extent that you don't have the receipt, but you can show it in your bank account, if you actually keep a log of what your purchases are, dated, and what you spent, that is another source of evidence that you can present. That you can present to the IRS in the event that you're ever audited.
Yeah, I try not to use cash. Matter of fact, I never use cash for business stuff. I mean, you want a record? I want to keep a record of it. See, Henderson, there are many bank statement loans that you don't need taxes. You can take as many losses as you needed. Clarence, have you ever used one of those? A bank statement loan?
No, but I have heard of them. So I would say whoever those providers are, hey, we need to know who they are.
Yeah, put those in the. See, Henderson, I didn't even know what a bank
Like a
statement.
no-doc loan.
I thought them joints went out with 2008. Maybe they're coming back.
Hey, if he knows it, please share that information so we know who those individuals, who the loan providers are.
Good point. Yeah, see, Henderson, put them in Put them in the chat and I'll share them in the video description if you can. Julio, what's up, my friend? What's the average price to meet with a CPA? I'm guessing to kind of get started with getting books set up, Clarence.
Average price to meet with a CPA, it really kind of depends, but I will say, if you got at least $200 to set up a consultation, most CPAs will probably sit down with you for at least that or more.
Got it. Thank you, Paint Dream. Thank you, Christian G. Thank you, Raymond Faye B. If I have a holding company LLC in WY, what's WY?
Is that Wyoming? I don't know.
Wyoming. I don't know. And buy properties mostly in Maryland. Should I get another holding company in Maryland where I conduct most of my business for asset protection? Clarence.
That's another one where, I don't necessarily want to answer that because I don't know all of the particulars, but that is a great conversation to have with your CPA and attorney.
That's a good one. Clarence, I know some guys, I'm just learning that some people have their LLC and business set up in other states to get the state income tax lower in that state. Are you seeing people do that as well?
I don't have a lot of my clients that are doing that, but I have heard of individuals.
Gotcha. Not your people? Yeah, I don't. I'm just seeing it as I'm just meeting people and seeing other large businessmen doing different things. Raymond said yes. Oh, I don't know what he asked him. Oh, he said thanks. Okay, Clarence, I had Joe here for an hour, my friend. Listen, round up. We're on here with Clarence Harris. If you got any more questions for the CPA, put them in the chat there. I am diligently and vigilantly working with Clarence to put the Travel Nurse Airbnb short-term rental training workshop together. If you don't want to miss that, make sure you're signed up for our email list. That list is in the video description. All you got to do is click on it, give us your email address so you'll know when it's coming up. Right now, we've got it set for March 5th. Clarence and I will be diligently working on that over the next few weeks to bring that to you and get the workbook so you can follow along. We're not going anywhere yet, but make sure we're almost at 100,000 subscribers. Hit that subscribe button. My commitment will be at maximum effort over the next few months to make sure I bring you exactly what you need to know regarding keeping your business alive and floating and well in 2022. Clarence Harris, CPA. Oh, I got some other questions came in. Oh, no other questions. Final thoughts, my friend, for getting your books in all the order and getting ready for 2022 taxes as we approach the end of January.
Right. So if you haven't had an opportunity to sit and get your books in order, please go out and get with a CPA, get with other bookkeepers, accountants who are involved in doing this. You need to have that individual as part of your team. If you want to reach out to me and whether you want to work with me directly or you want me to make an introduction to another provider who's great and fantastic, I would be very welcome to make introductions to other bookkeepers and CPAs. And if it's myself, I like to work with real estate investors. So give me a shout.
Thanks, Clarence. I really appreciate you. All right, Roundup. It's an honor to serve you tonight. As we get wrapped up, click that thumbs up button below. Share this information with anybody else you think needs to understand how to get their bookkeeping in order. You don't want, I had no idea. You don't want 1, 2, 3 years. I guess from what you're saying, the perspective, Clarence, once you missed a year, 2 years, it kind of just starts to bleed all together. And then you're like, damn, it's been 3 years.
Yeah.
I pray that doesn't happen to my Roundup homies. All right, Roundup, much love to you and your family. I'll see you on the next video. Peace.